Good morning, it's Harvey Jackson. Just going to go through the rally that we saw yesterday in canola and what might be the result of it. So you can see here the Kansas Wheat Tour first day ended, and you can see that it's a 50.5 bushels the acre production. You can see there. The other thing that is maybe noteworthy is it's at the area that they had their scouts going is at 42 percent good and 6% excellent. So comparing that to the USDA ratings of over 55%, and it could be in a poorer area too. So I didn't note the area that they were actually doing their scout, but 40, let's call it 48%. So it's a little bit shy of the other numbers. Inflation has maybe pulled back a little bit, the April numbers for the CPI, which is a good thing. But at the same time, and the reason that it might be a good thing is like, what direction do you take your interest rates, or do you start cutting rates, or whatever, right? Or do you hold? And that's what the Fed will be looking at, is these numbers that are coming out. India wholesale inflation actually slowed as well, down, uh, recorded at 0.85% year on year compared to 2.05 in March. And it being the largest population in the world, country in the world, it's probably significant to understand that their food prices are falling. U.S. soybean exports may fall 20% without a U.S. trade deal, and this is put out by the Ag Resource Group, and it's just suggesting that you could still lose some of that production, and whether that's going to be significant or not is the question. So I pulled this from the USDA report, and again, I've already put in some numbers here just to calculate it into acres, but what it is actually the harvested acres. So they're saying last year was 21.868 harvested acres, and suggesting that we're going to get slightly higher harvested acres than last year, and that's possible if we get better weather. But uh, it's also suggesting that we're planting more, and this number here is already 1 million metric tons higher than the StatScan as well, with a 1.5 carryout. So like, none of this is actually really adding up to even what StatScan currently has as well. So there's just a note there. The other part that I'll probably point out is this crush number. They're saying 11 for this year they're currently running, with exports at 8.7. That's probably realistic. 11 might be realistic if we keep on slowing at the pace that we did last week. But the other one that I'm going to point out is the 11.3. We're adding 3 million metric tons of crush capacity this coming fall. So where's they're only getting increased by 300,000. Yeah, we have to look at that, right? But and see where that's going to happen. Your canola ending stocks in Europe, they're basically saying it's flat. Canadian ending stocks is at 1.7 expected for 2025, and that's a pretty tight number as it is. Just for the fact that you're going to end up you're going to have another two crushers and added capacity to another one, and just holding of canola is going to be at a greater number. Is it only 200,000 or 100,000 or 150,000, whatever that number is? It's not big. Yeah, and you basically got to carry from one year to the next as well. Wheat ending stocks, you can see the increase this number from last month, which was a decrease, or was decreasing at 263, I think it was, and I might have that number wrong, but you can still see the slope here. It's still decreasing. Total wheat supply, it looking like it's going up this coming growing season. Um, so that's part of the numbers why the wheat is not rallying at all. Global corn ending stocks is going down, and it's basically saying we're going to grow some more. But if you look at who else is producing, or have ending stocks, and it's only U.S., and that's why the corn is probably going to take is not going to be sitting in the back seat of anything here for the U.S. U.S. Farmer. Here's your canola ending stocks. You've been increasing year over year, and who's the holder of them? You can see right there. Brazil, Argentina, U.S. U.S. ending stocks is expected to decrease. I just want to bring up this map because you can see this is the shallow groundwater area, and I want to point out that area there. Uh, this is the BAM Weather Service, and they're basically projecting high risk of lower than normal corn yields just because of some of that drought. And Eric Snodgrass is also suggesting the same thing. So we've got some more weather ahead that could actually maybe start spurring this market if things start to line up, that some of those projections of lower moisture. Here's just Western Canada. You can see that there's some pockets of fairly dry. We do have those forecasts of some rains coming in, and it's basically covering this area. This area is going to be void, so Saskatchewan could be a bit of a target to watch. Canola is up to 260 on the July contract and only 50 cents up on the November. Rapeseed is basically unchanged. Soybean oil is down a third of a penny. Crude oil down three-quarters of a dollar. Soybeans are up. Wheats are all down. And the Canadian dollar is basically unchanged here. Let's just have a look at it here. So I've got a couple different maps here, so or charts. So this is our current chart. We're $732 right now, where the market is currently sitting, and for the new crop it's 690. So upside target is probably because we've got the bigger differential. If the market were to get to 760, 720 would be probably a target to sell at this end if we can keep this $40 differential. You can see we've been holding this. 40 to $42 differential right now. If that continues, look for an upside target probably close to the 720 if we can get to 760 on the July, and it's got to happen pretty quick. What I'm showing here is just the canola priced in US dollars, right? And so you got 524, and you can see the trend. We're making higher highs there. And then when you look at the European, we're 547 on their front month. So it's a lot closer than you think, and it's trying to make higher highs even at priced in US dollars as well. Rapeseed in for the August contract. And here you got an $80 differential for the NOV to NOV, November Canadian canola to November European canola or European rapeseed, which is possibly fair market value there. Here is your soybeans. It's making a higher high at 1075, right? And it's creeping up on the RSI as well. And if you look at the soybean oil, and had to look back to see the last time we made these highs, it's all the way back into November since we've been at these values of 51. Your crude oil, it looks like it's taking a break today. That could be Trump in the Middle East countries visiting with those countries to try to get some more U.S. spending and some trade talk, or not so much just trade talks, but some peace talks there as well. So here we are with the Canadian dollar. This could be an opportunity to buy if we pull up a little bit for the pull down. That is more likely. We pull down into this area down here. So let's have a quick look at wheat. Continue to make more lows in every contract. And I don't want to spend a whole lot of time here because all it does is just tick us off here when we look at this. You keep on making lower lows, lower highs. So here's your milling wheat in France. It's already made lower low there, so you have to look all the way back to March of 24, the lows that it's made. Corn, it broke through these current lows here. Now we're looking at, have to look farther back into um, the fall before we saw these values. But I do want to point out that it's looking like it's getting oversold now. Whether we can use that as a rationale as well, because here you got overbought kind of a situation here too, and it can stay overbought for longer than you think as well. So this is just your feeder cattle, and it's making new highs as well, even though it's pulled back a little wee bit here. And that's all I have for you.